Hello traders, welcome back to the Forex Geek where we dive deep into the tool that can help us make smarter trading decisions. And in today's video, we're going to be talking about the Parabolic SAR indicator and how we can use it effectively in our day trading strategy. So by watching until the end, you would learn exactly how this indicator works, how to use it, and a step-by-step approach to implementing it in our trading routine. Now, what is the Parabolic SAR day trading strategy? Now, remember the Parabolic SAR short for stop and reverse is a technical indicator designed to identify the direction of a trend and signal potential reversals in price movements. Now, this indicator was developed by J. Welder, and it works by plotting dots above and below price bar on the chart. Remember, these dots shift position based on trend direction. Now, when you notice these dots are appear below price during an uptrend, this is what it means. It means that the market is in a bull run, meaning when you see the parabolic SAR below price, it means the market is in a bull run and we look for only buying opportunities. When we notice that the parabolic SAR dots are above price, we should know that it is in a selling opportunity and we should be looking for only short trades. This is basically what it means. It is a very simple indicator. You just need to know the basic. When parabolic SAR is above price, it means you should be looking for only selling opportunities. When it's below price, you should be looking for buying opportunities. The parabolic SAR, which is stop and reverse, is particularly useful for day traders because it provides a clear visual clue about trend direction and potential turning points. For example, when the dots converge towards price, when it converges towards price, it is when it converges towards price, it indicates a weakened momentum, and when it flips sides, it suggests a reversal may be on the way. As you can see at this area in the market, when the parabolic SAR converged, it was squeezing, it contracted at this area, you can see that it indicates that a reversal might occur around this area. This is basically what it means. Then when you see the parabolic SAR indicator giving space, it expands like this, it means that we are in a strong trend. This is basically what it means. So let's see how we can apply this to our day trading strategy using the parabolic SAR for a day trading strategy. This requires a systematic approach to identify trends, entry points, and exit signals. This strategy works best on short time frames for scalping too, but for this strategy, we'll be looking at day trading strategy. Now, for us to day trade, remember day trading is basically catching moves within the day. So we'll use our 1 minute, our 5 minutes, and our 15 minutes chart that will be ideal for day traders to seek and capture quick market movements. Then you have to you'd make sure your parabolic SAR indicator is being set to 0. A standard setting of 0.2, and for the step parameter at this start point, the increment has to be at 0.2, then the maximum value has to be at 0.2. This is the standard setting, but the normal default setting would be 0.1 and 0.1. 0.01 is also good for day trading also. For optimal results, you can actually combine your parabolic SAR with an ADX indicator. The ADX, which is the average directional index. the ADX can be an indicator you can combine with. This will help confirm the strength of the trend with readings above 25 indicating strong trend. When you notice the reading at the ADX is above 25, it means a strong trend. Then when it is below 25, it means a weak trend. You can point out how the dots position below the price bar during an uptrend and how the ADX reading above the 25 confirms the trading opportunity. Now let's look at this area in the market and get a perfect example. You can see in this area of the market when price switched from when the parabolic SAR switched from above charts to below charts, we can see it gradually moved and complements our ADX. As you can see, at this point it was above 25. At this point it was above 25. This is a strong signal for us to enter our buying opportunity because it has complemented our parabolic SAR. And at this moment, coupled with the fact that the parabolic SAR is below our price, which is number one confluence, followed with our ADX indicator confirming that the strength of the trend is above 25, meaning that this will be a good place to buy this trade. Now, remember that risk management is very important. You would have to always set a stop loss to below the most recent swing low, or you can put it below your parabolic SAR dot to give your trade enough room, and you would have to capture a risk to reward of at least 1:3 to capitalize on your move in the market. You have to place your stop loss order at a level that the most recent parabolic SAR dot was at. So if we are to buy at this area, you can put it below where it switched, or you can put it below this swing point. This will create a dynamic risk management system that adapts to the market condition. As the trend progresses, the parabolic SAR dot will continue to move, allowing you to adjust your stop loss accordingly to protect your gain. Meaning we can actually trail our stop using our parabolic SAR. So the more the trade moves in our favor, we keep adjusting our stop loss above the next parabolic the previous parabolic SAR dot until we capitalize on all our profits. You can also use the double parabolic SAR approach, which can enhance your day trading strategy by filtering out false signals. Now this technique involves using parabolic SAR on two time frames. For example, we would have to use one on our 15 minutes time frame. Let's move to our 15 minutes time frame. Then we'll use the second one on our 1 minute time frame. So we start by using our 15 minutes time frame to confirm the overall trend direction. And as we can see at this area in the market, the 15 minutes time frame showed us that the parabolic SAR was below price and it was currently above 25. At that area, it became below price. Then if we go to our smaller time frame, which is our 1 minute time frame, and as we can see at this area of the market, this was where our parabolic SAR on the 15 minutes was showing us that it switched from bearish to bullish. So at this point we would go use our 1 minute time frame to get a better entry for to catch the 15 minutes swing move. And what is going to happen is that we would enter the moment we see our parabolic SAR below price on the 1 minute time frame. So this would have been a perfect place to enter. If you are not confident enough to enter at this point, you can enter at the next point. This would have been a perfect area to enter the market. So this will where we would have entered the market at this point. And as you can see, the 15 minutes time frame would show us the broader picture of what we are trying to capitalize on, and we can always use our trailing stop to capitalize on the full move, or we can use a fixed move of 1:2 risk to reward ratio to capitalize on this move. Remember, your position size is very crucial when taking trades. You should always never risk more than 2% of your account, 2 to 3% of your trading account, to manage your risks effectively. This ensures that a string of losses would not significantly impact your trading capital. Trade only in the direction of the higher time frame, meaning in this 15 minutes chart, the 15 minutes has already given us a clear direction of the market, that the market was trending to the upside at this area. When you go to your 1 minute, you don't come to your 1 minute and start looking for selling opportunities. No, you have to look for only buying opportunities to capitalize on the higher time frame move. So you have to exit your trade when the parabolic star flips to the other direction, meaning you can exit your trade when it flips to the opposite direction. Once it switches to the opposite side, it indicates that might the market is ready to reverse to the other direction. As you can see, when price switch at this area, it shows that price was about to stall before it reversed. This simple exit strategy allows you to capture the majority of trends while avoiding common mistakes of holding positions for too long. Alright traders, we have come to the end of this video. Why not engage with us in the comments below? We want to hear about your experiences. And if you found this video helpful, do not forget to like, share and subscribe. Turn on your notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.